Hi, I am Anna. I come from www.ntvforex.com. Time for inaction analysis. http ntvforex.com News ID 5E3D2E94 2020 12:52 9 p.m. We do not expect material changes to the ECB stance at next week's meeting, hence a readiness to act given the highly uncertain economic and inflation outlook will remain. With no new policy signals to act as catalyst, we stay neutral on markets through the press conference. In fixed income, we continue to expect range trading driven by the offsetting factors of increased supply and large PEP purchases. We expect Lagarde to be questioned on the Fed's recent aid decision and implications for ECB's ongoing strategic review, as well as the stronger euro and its implications for the subdued inflationary outlook. Digesting the data, the ECB meeting on Thursday next week, which also carries new staff projections, is set to be relatively uneventful for markets as the ECB still needs further data to assess the economic and inflation impact from COVID-19. According to Governing Council GC members Schnabel, Lane, and Casimir, the euro area recovery pace has roughly been in line with the assumptions of the ECB's baseline scenario, which foresees growth of 8.7% this year and 5.2% next year. Therefore, we do not expect the ECB to act next week, but rather signal a readiness to act should it be needed, noting also that incoming data will be providing a better guidance for potential policy actions. As PEP purchases have slowed in the past weeks, abating some of the front-loading, we have noted a slight tightening of financial conditions in the euro area, but with PEP purchases set to increase as of this week, we expect easing conditions going forward. Bloomberg's survey among analysts expects no new measures next week, but majority points to PEP increase at the December meeting with a median expectation of an additional EUR350 BN, heading into H2 next year. Disagreement in the making after a prolonged period with next to no ECB speakers on the wires. We have had a number of key speakers in the past week, which may point to building disagreement in the GC. Chief Economist Lane continued his cautious and balanced reflections, while Schnabel, and to a larger degree Weidman, pointed to ending the COVID-19 related stimuli once the crisis was over, but also reflecting on the debt burdens and sustainability of the current debt levels. We interpret that as more stimuli are not around the corner if the economy and inflation develop broadly in line with the projections and financial conditions not tighten. Interesting QMA. The introductory statement may prove relatively uneventful, but we expect Lagarde to be asked a number of key questions that markets will digest the next weeks. A target vs ceiling. With the ECB's front-loading of PEP purchases, we do not see the validity to this discussion unless the economic and inflationary outlook improves rapidly, resulting in a significant slowdown of PEP purchases. Furthermore, financial conditions are still significantly tighter than pre-March levels, and we believe the ECB will be wary of not triggering tightening. If the ECB were to lower the purchase rate, we see a substantial risk of a repricing across the government bond yield space. Be stronger euro. Both ECB board members Schnabel and Lane have said that they do not target the exchange rate as part of their monetary policy strategy. Lane added that it feeds into global and European forecasts and as such also the monetary policy. Front-end pricing has reacted after Lane's comment chart on page 1. We still do not expect the ECB to cut rates. See low inflation print. HICP headline inflation moved into negative territory for the first time since May 2016. However, for now we think the low core inflation print will not create too many concerns at the ECB, as it is mostly due to base effects and government initiatives. German VAT cut, and inflation will likely rebound in September. We expect core inflation prints of C0.7% from September onwards and look for an acceleration again at the start of 2021. After the longer-dated inflation swaps rebounded to pre-coronavirus levels in August, we stay sidelined for now. Fed S8. We expect the ECB to face questions on the Fed's average inflation target 8 regime and the implications for ECB's strategic review, which is restarting now. We expect Lagarde to take note of the decision and say that the ECB will not make preemptive conclusions of its own review. Our expectation is a confirmation of a symmetric target, formulated in a sufficient flexible way to let the ECB conduct its monetary policy without any limitations. Also, Lagarde seems keen on including climate and financial stability as work streams of the strategic review, which surely will not make it less complex to achieve the inflation target. Escaping the exchange rate curse, the recent appreciation of the effective euro by some 5% since the start of the year will likely factor prominently in the GCS deliberations at the meeting. However, opinions on the impact on growth and inflation seem to diverge. Chief economist Lane noted this week that the euro-dollar rate does matter in that it feeds into our global and European forecasts and that in turn does feed into our monetary policy setting. However, Isabel Schnabel indicated that she is not yet too worried about the exchange rate developments, also as a boost to global trade from a weaker dollar could offset a drag on euro area exports from the stronger euro. While the euro appreciation fear has made a comeback among some ECB policymakers and will likely also influence the ECB's new staff projections, we remain skeptical that it will materially change the fortunes of the euro area inflation outlook. See also Euro area research escaping the exchange rate curse, September 4. ECB research has shown that the pass-through of exchange rate movement has declined in recent decades, both due to the low inflation environment and the changing composition of imports. Download the full research. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.